Good afternoon. Thank you for joining us for this webinar series, Integrating Sustainability into Your Small Business Using the ESG Model. Today is session 1. I'm your moderator, Renee Goodnow from the New York Small Business Development Center. Today's host is the PACE Small Business Development Center. The PACE SBDC is part of the New York SBDC's network of 22 campus-based centers and outreach offices, which are located across New York State. We are a U.S. Small Business Administration resource partner. Our free services are made possible by funding from the SBA, New York State, and our host campuses. Joining us to lead things off and to introduce our speakers is PACE SBDC Director Andrew Flam. Andrew, I will turn things over to you.
Thanks so much, Renee. Good morning, everyone, and really appreciate you joining us this morning. Again, my name is Andrew Flam, Regional Director of the Pace University Small Business Development Center here in Lower Manhattan. Welcome. For those of you from the city as well as from elsewhere in the state, we're so pleased you're able to join us today. Wanted to very briefly touch on kind of who we are, what our services are. For those of you joining today who are not working with an SBDC, small business development throughout the state already. And then obviously we're going to focus and kind of turn the session over to two terrific speakers that we've had the pleasure of hosting previously, and looking forward to kind of having this be a kickoff of a 3-part series that we'll be working with them on over the next 2 months to come. So again, my name is Andrew Flam. The Pace University Small Business Development Center, as Renee had mentioned, one of 22 centers located throughout the state. Our focus is on providing in-depth and confidential one-on-one business advisory services, both to existing small business owners as well as to aspiring entrepreneurs who are looking to launch a new business venture. And our focus is looking at a number of different issue areas that small businesses come across in terms of helping them build and grow here in New York State, such as access to financing, thinking about how to build and grow your marketing efforts, access to procurement opportunities and various certifications that may be in place, and thinking about kind of operational challenges, both sort of improving how you operate and looking at challenges that have arisen, obviously post-COVID, sort of thinking about how to kind of build and regroup and re-envision kind of, who you are, what you do, and how you're able to generate the important sales, be able to kind of keep your business thriving. So again, we're staffed by full-time business advisors, and what I'll do is put a link in the chat in a moment that will give you an opportunity to reach out to us. It's a brief form, takes 2-3 minutes to complete, just so we know who you are, what you need help with, and where you're located. And then a business advisor will connect with you to set up a one-on-one business advisory session. Again, all those sessions are offered at no cost. We also, as today is an example of, we have a wide range of training programs that both we host ourselves as well as our colleagues from throughout the state. So we certainly encourage you to take advantage of those training programs, really diving deeply into individual topics that can help you build and grow and sort of think about how to improve the operations of your business venture. And I'll put a link in the chat in terms of how to be able to access those programs as well. Let's see, what else should I make sure I mention? I wanted to talk a bit about COVID recovery programming, not the topic of today's discussion, but there are a wide range of resources that are out there and existing programs from both public and private sector sources, grants, loans, and other resources that are in place to help businesses rebound through this challenging time. So if you have not taken advantage of them, or if you have applied and have questions about how the process works, our business advisors are here to help you. So I will put a link in the chat as well to be able to make sure that you have information about those programs additionally. And finally, as Ray had mentioned, and as I touched on briefly, this is the first of a 3-part series. So we do hope that you will get a great deal out of it. We've had this session before, and we had a really good turnout and really had a lot of insightful comments that came out in terms of how sustainability can really be able to help businesses look at improved operations and how to be able to kind of access new opportunities going forward. So I look forward to the discussion today, and as well as, I guess, the additional 2 sections of this series that will be coming again the tail end of April, and then again at the tail end of May, and we'll have those links available for you as well. So without further ado, I wanted to introduce my colleagues and who will be tackling today's topic. I guess first I'll kick off with Professor Steve Mezzio, a colleague of mine at Pace University, and also Associate Dean and the Executive Director of the Center for Sustainable Business at the Lubin School of Business here at Pace University. as well as Rick Kravitz, who is the editor-in-chief of the CPA Journal and is with the State Society of CPAs. And they've been very generous with their time, and really appreciate you both coming back to lead the session for us. And with that, Steve and Rick, I'll turn it over to you. Thanks again.
Thank you.
Hey, well, thank you, Andrew, and welcome everyone. It's an absolute pleasure to be here. As Andrew mentioned, this is the first of a three-part series, and the idea would be this is an introduction, if you will, and we're going to build on this introduction with two more narrower topics over the next 2 months. So we hope you enjoy this session and you benefit from it, and we hope you join us for the following two. Here's our agenda. We're going to start off by looking at the big picture of ESG as it relates to a small business, and we're going to look at things like trends, terminology, and common practices particularly for small and medium-sized businesses. We'll then move into a discussion around how, in practical terms, a small business can begin or expand the integration of an ESG mindset and an ESG sort of practice into a small business model. And then we'll conclude with some perspectives on how other small businesses have either started or are expanding an integration and communication of ESG impacts and outcomes. What I'd like to say, so both Rick and myself have both academic experience, but very deep industry and business experience. So we are bringing to this presentation, as best we can, a more practical approach. Now, you're going to see some theory that we're going to be discussing, and you're going to see some concepts that perhaps might not appear relevant to your particular business. For example, you might say, it's easy for a company like Starbucks or Pepsi to do some of these things because of their size and their availability of people, availability of all types of resources, including money, to do these things. But I'd like you to think about how some of these things can be done in smaller businesses across different sectors, across different geographies. And we are seeing these types of topics that we're going to discuss being implemented at levels even with sole proprietorships. And so we will sort of focus on practical implementation as we go forward. So with that, let's just begin and start out with this quote from McKinsey, which is, as you may know, is a large consulting firm. And this is not just McKinsey's perspective. We are seeing this across the marketplace, this idea that as a business, again, across geographies, across industries, across size, as a business, ESG is no longer sort of a nice thing to do or a good thing to do. It's becoming what many of the market is calling a mandate, meaning you need to integrate ESG into a business model. It's no longer an option. It's sort of a must do. But let's unpack that a little bit. I'm going to ask Rick this question. So McKinsey says, Rick, integrating ESG is no longer an option, but it's a mandate. Can you tell us why that is?
Sure. Thank you so much, Steve. And if you go to the next slide, really, the fact is that at a high level, according to one of the largest accounting consulting firms, ESG is the new lens through which all businesses will be evaluated by their stakeholders. And the stakeholders include employees, vendors, suppliers, investors, and most importantly, your customers. It's not only your commitment to ESG that is important, but how you positively demonstrate this commitment through your actions. And if you think about it in just simple terms, sustainability is really all about successfully growing your business, creating long-term sustainable value for all your stakeholders. But even more importantly, the KPMG study found that consumers are willing to spend 20% more for goods and services that are environmentally sustainable, and from companies that are rated among the most ethical and sustainable businesses. So this is a really critically important takeaway for businesses of all sizes and all industries and all professions. As well, the biggest investors today, those big 5 institutional investment firms, through which 90 million Americans own shares in U.S. public companies, now focus on what John Bogle at Vanguard calls profits with purpose, radically different than 20 or 30 years ago. How do we create value for all of your stakeholders and contribute to a sustainable society?
Excellent, Rick. And may I ask, as you use the term stakeholders, can you sort of expand a little bit on how that's transformed really and disrupted businesses in terms of that being sort of the centerpiece of a business purpose these days?
Sure, and we're going to discuss this a little later as well, but stakeholders are everybody that has an interest in your company. If you're an employee, why should I work for your company? If you're a supplier, why should I sell you products to your company or services that I could sell to others? If you're an investor, why should I invest in your business when there's other businesses that are more focused on ESG? I guess that's about it, Steve. Yeah.
Yeah, excellent. And I'll just add, stakeholders have even expanded to sort of actors in the marketplace that are not working for you. They may not be customers. They may not even be in your community or in your industry sector, but will have a view about your business and will make that view obvious to the marketplace if they're not particularly happy with you. So it's a very broad notion, this idea of stakeholders.
And Steve, to your point, if you think about social media and third parties that distribute social media, I mean, a critically important channel for the stakeholders.
Exactly. So Rick, let's move to sort of pivot off of that previous discussion and I'm going to ask you another question, and this one is really about what has really changed from a business perspective that really but in some views, a radical change from previous generations of businesses. As we begin to see companies like Bombas, who sell socks, and startup companies, beginning their business life cycle with a different mindset. What's changed from previous businesses, and how does that impact a smaller business?
Sure. If you look at the next slide, for example, here's three I think that are absolutely critical. First, competitive advantage. Purpose-driven firms, according to all studies, outperform those whose focus is simply on short-term profits. I mean, clearly it's long-term sustainable value. And second, ESG or sustainable brands create longer-term value for all size businesses and provide additional opportunities for growth and ways to reduce risk. Now, this is an important critical takeaway. And finally, by integrating ESG into your business strategy, you can provide meaning and purpose to your hard work. You can make a meaningful contribution to society in the process. And the next generation of professionals are clearly looking for businesses that can make the world a better place.
Absolutely, Rick. And if we could look at the second bullet point, in fact, all three bullet points is what I'm going to ask you relates to. But you previously in the previous slide, you mentioned this idea that there are customers today that are willing to pay a premium for a product of equal value if they believe it makes the world a better place. So can you expand a little bit on that? Because I think that impacts the first two bullets.
Sure. In fact, there are a number of new organizations that rate companies according to their ethics, according to their sustainability, according to whether people trust the organization. And these organizations are viewed in the hundreds of millions of times each year by customers. And customers are focused on the companies that actually are the most ethical and the most sustainable.
Yeah, and we're going to talk about this a bit more later on in the presentation, but one of the issues, particularly I think for some small businesses, is this idea that, look, if I'm going to sort of be more environmentally conscious, be more socially responsible, that's going to actually add to my cost of business. And it may not necessarily translate into revenues, at least not immediately. And so, you know, this ESG movement is going to sort of have a negative impact on my P&L, on my bottom line. But again, the idea that we're seeing emerge is one that customers will pay a premium if they believe, particularly the generations, the younger generations of customers coming through now, if they believe that part of their purchase of your product is actually not just for the product, but it's going to actually contribute to some environmental or social cause. And I think the other thing is that, as the second bullet says, the longer term value idea is that this is a long game. It's not necessarily immediate. So the more that the firm or the company becomes ESG oriented, the more the marketplace will embrace them going forward.
And there are a number, you know, to your point, and as well, there are a number of small, medium-sized businesses that want to grow to a certain point, then ultimately be acquired by a larger company. And clearly, the institutional investors are looking for those businesses that have ethics and ESG in their DNA.
Absolutely critical. What about intangibles, Rick? What can you tell us about intangibles?
Well, this is actually an important change from our product and service economy and our agricultural economy 50, 70 years ago. So let's look at some of these intangibles which impact business and professions of all sizes, small, medium, and large size business, and how you can create a greater, more lasting value for your business by leveraging some of these in even more powerful ways. Now, the hidden assets or intangibles are really the rich streams of value that make your business special. We call them intangibles because you won't find them on the books of any company. In fact, 84% of the value of a company, the true value of a company, lies hidden in its intangibles. These are the dominant creators of value. And of course, you know them well. And they include, above all, your reputation. Call it your brand identity, what your brand means to customers, plus any patents, trademarks, design, business method, processes that you develop, reputation to your customers. Then there's human capital, a skilled workforce, your leadership, your ethical behavior, that's governance, your employees, their talents, their knowledge, institutional memory, creativity, a stable workforce, even more critical during COVID and what we call the Great Resignation wave. Critically important to retain the relationship with your employees and your customers. And regarding customers, I call it customer and market intimacy. These are the elements that provide competitive advantage over your customers, knowing exactly what they need. So these hidden intangible assets are today the dominant creators of value, and intangible investments today are at the $2 to $3 trillion a year, regardless of whether these are large businesses or small businesses.
And Rick, at the bottom, it's mind-boggling that these, many, if not all of these, do not appear in the traditional financial statements on the balance sheet, if you will. But look at the value below that's been estimated.
And Steve, if you think about human capital, which are employees, critically the most important element within the successful long-term success of your business, are expensed.
Right. So you see this evolution in business, and now you look at this through the lens of this topic today, which is ESG and building ESG into a small business model. And you look at reputation, you look at brand, you look at skilled workforce. Let's just focus on those three. You know, what the market perceives as your a business's commitment and positive contributions to environmental stewardship and social responsibility will have a substantial impact on your reputation and brand. And in terms of a skilled workforce, you mentioned this earlier, Rick, and I think it's worth repeating and we're seeing this across the board, large and small companies, where, again, employees will make decisions not just on salary and title and role, but also on how they feel about the company and how they feel the company is contributing to society and the environment. Is that fair, Rick?
Absolutely. And there's so many rating services like Ethisphere and Glassdoor and others, And these are the rating services that people go to when they're looking for jobs. And if they feel that the existing employees are positive about the business, are making an impact to society, they're going to want to join that.
And so you look down this list of intangibles, and I could probably make an argument, we won't do it here, that ESG can influence all of these intangibles in terms of either positively or negatively.
Exactly.
So finally, we talked about evolutions in business. Here's another massive evolution, the role of supply chains in business. What can you tell us about that?
Sure, this is absolutely more critical today than ever. Inattention to supply chain risk is a greater risk than anything that is physically owned or manufactured. Supply chain management of these risks impacts businesses of all sizes, especially during this period of COVID, which impacted global transportation, trucking, shipping, manufacturing in third world countries. It's in ways never imagined. Chips caused shortages of refrigerators, autos, and others. And we can't, of course, ignore a geopolitical risk. So the question is, do you know where your resources, your products and services come from? Your third-party suppliers, your software developers, your products and services. Inattention to supply risk and supply chain sourcing is perhaps the greatest risk in our global society than anything that is physically owned or manufactured. The World Environmental, the WEF reported that 90% of businesses name supply chain and transportation risk as one of the greatest risks in doing business today in our global society. So my question is, do you know where you source your goods and materials from? More critical today than ever.
Excellent, excellent. And you know, supply chain, again, regardless of the size of the company, you are, as a business, incredibly dependent on supply chains, and sometimes transparency is very difficult to achieve, isn't it, Rick, on a supply chain?
Yeah, in fact, there's a company, REI, for example, had anticipated some of the risks of not being able to obtain some of their raw materials in their manufacturing. So they actually set up small businesses in other parts of the country. They're like shell factories waiting to get into manufacturing of their goods so they wouldn't be out of their coats and winter jackets for the winter. And I think that's the kind of thing that you have to think about today in terms of supply chain limitations.
Yeah, and this transcends so many issues. And you know, one of them as well is on the transparency side of who the actors are in your full supply chain across the entire supply chain, and what are they doing? Are they having a negative impact on society and the environment? Because what's happening today is, in spite of the fact that they may be well out of control of your business and well down the supply chain line, remote, if you will, from you, if you're depending or using anything that's related to that supplier or vendor, they're going to automatically sort of tag you as the business as having some contribution to the negative impacts.
And Steve, to your point, the state of California actually passed laws on supply chain for employees that you don't own in terms of underage workers, forced labor, and other things. And you, as an employer, not of people that you don't own, still can be, as the owner of a company or a business, you still can be liable for the acts of subcontractors that you don't really own.
Right, you can't control them, but what you can do as a business is understand what they're doing, and then you can exit from them if need be. Is that fair?
Exactly. In fact, there are huge companies today that actually provide third-party supply chain assurance in the pharmaceutical arena and other areas to make sure that you're not violating any of the laws of California or the European Union.
Complicated. This is a complicated business world, isn't it? Yeah.
It's very complicated. So I'd like to talk a little, if I could, Steve, on the impact
of the stakeholder issue. Yeah,
the stakeholders. It's all about the impact that business has today on its citizens. And some might say that multinational corporations have more impact on the average citizen than sovereign nations. So before we do a deep dive in what it calls stakeholder value, let's look at the global economy as it relates to multinationals. Now you'll probably, you probably buy from them, supply products to them or services to them, or buy from them, but their dominance is unprecedented in history, because the 52 largest economies of the world today are multinational, are not sovereign nations, but multinational corporations. Let me give you an example. Google uses more electricity than the country of Sweden. Walmart employs 2.7 million people, over half the population of New Zealand, and 85% of government expenditures go to corporations. I'm not sure if any of you sell through Amazon, but the EU is cracking down on companies like Amazon who use their market dominance to knock out competitors on their sites. And I'm sure some of you sell through Amazon. And of course, Amazon, it's illegal for Amazon to replace your products with their own cheaper products. It's illegal in the EU and both the UK. So your mission is to recognize and consider the transformation of your business from owner value to stakeholder value, from share value to shared values, to ensure sustainable growth and success. One of the large institutional investment CEOs calls this the evolution from shareholder capitalism to stakeholder capitalism. But the key to creating long-term value, in summary, is giving your stakeholders everything they demand. First, and Steve, we talked a little about this before, your customers. You don't own them, but you really, in order to succeed, you need to earn their trust and their loyalty, to gain their trust. And you also need to respond to their new demands for sustainable brands and ethical sourcing. And you have to have a reputation out in the field in social media that you're one of those ethical businesses. And let's not forget the community you serve. It's the E in ESG. To be a good corporate citizen to your community, they provide the infrastructure and the legal structure that allows you to succeed. And my question is, what do you offer the community as a result? And for employees, we really talked about before, to retain them, to bring new ones in, the ones that will trust you. They provide the talent, the institutional knowledge, the stability, the responsiveness to customers and other stakeholders. And they retain the business processes that you need to create long-term value. And of course, in social media and traditional media, to retain the highest reputation of your brand. And finally, intellectual capital. To succeed, and I can tell you, I've done so much in corporations in this area, you need to continue to innovate, to develop new products and processes and techniques that allow you to achieve greater advantage over your competitors. Again, these are all intangibles, and it's part of ESG. Like, your personal efforts and those of your employees are critical to your long-term success. And I can tell you that the corporate graveyard is littered with companies that are focused on short-term profits above long-term sustainable value.
Excellent.
So Steve, let's do a little drill down, and let me ask you a couple of questions. So how do you simply define the terms sustainability and ESG?
Yeah, thank you, Rick. And we wanted to sort of go back to basics here for a couple of minutes. And the reason is that even in the previous discussion, I'm sure some of you might be reacting and saying, boy, there's a lot of lingo, a lot of sort of different terminology in this whole ESG movement and this ESG space, long-term value and stakeholders. And so we wanted to get back to basics and say, look, the word sustainability is thrown around quite frequently. The word ESG are there any differences? Are they the same? And so we did a little bit of sort of a very high level, where did all this come from to begin with? And so we didn't go back much further than the 80s just for this discussion. But as we've been sort of alluding to with the stakeholder versus owner concept, where businesses were much more focused historically on owner profits. And we saw that through the 1980s, where sustainability, quote unquote, meant a business's ability to increase profits steadily. So a sustainable profit going forward. In 1987, the UN sort of advanced a definition, their definition of sustainability, which in summary, we just sort of pull this just to summarize it. It's a much broader definition. If you expand it on the UN definition, it says meeting the needs of the present, so doing what you need to do today without compromising the ability of future generations to meet their own needs. And so what does that mean? I mean, as you look at it, it's basically saying, look, you're a business, do what you need to do to succeed and to survive as a business going forward in the long term. But while you're doing that, don't have any material negative impacts on society or on the environment. And so we pulled an example of the 1990s, which was Ben & Jerry's. Ben & Jerry's is now owned by a multinational, Unilever, but when Ben & Jerry's started out as a small business, they really were pioneers in some respects on this, what we're seeing today as a sustainability movement in business. And if you look at their early depiction of their mission, it says our product mission, our economic mission, and our social mission. And you think about this is 1995. And they were sort of already at that point beginning their business model, creating a business model that was already rooted in what Rick talked about earlier, which was a broader stakeholder mission as opposed to solely an owner's mission. So they talk about their product mission, which is to make great products, an economic mission to have financial growth, and then a social mission. And this is the S in ESG, isn't it? It calls us to use our company in innovative ways to serve the common good. Again, 1995, and where we are today, that's a long time ago, isn't it, Rick?
It's a long time.
Yeah, and so pioneers in many respects. And so that leads us to the discussion we've had up to this point, which is you're going to hear quite a bit about from us and in the marketplace. You're hearing business purpose, and that's pardon the pun, but it's purposeful that they're using this notion of business purpose as opposed to mission. For example, and the reason is they want the purpose to extend to what we're going to see in a minute, this idea of focusing on social responsibility, economics, environmental stewardship alongside of financial well-being or profits of an organization. Part of this sort of definition of sustainability and ESG relates to the two issues that we've talked about already. I'll just mention them again briefly. One of them is trust. People want to trust the company they work for, people want to trust the company they buy from, and people want to provide funding, whether investments, whether, we'll talk about this in a minute, financial institutions, et cetera, that in terms of investing in the businesses that they believe in. And that trust in increasingly large measure is going to be based on ESG factors. And again, we talked about the integrated purpose.
And Steve, if you think about it, there's a shortage of talent today, especially with this next generation. So you want to find people who really trust you, who want to work for you. That's so critical today. So
before I go to the next slide, what I'd like to leave the audience with is this idea that from a business perspective, sustainability is the broader umbrella topic of all the things we're hearing about: social responsibility, environmental stewardship, diversity and inclusion, greenhouse gas emissions, just this big umbrella term. In business, we're seeing this term be used much more on a practical level. And the reason is that these are much more the E and the S particularly, but all three, the ES and the G, it's much easier for a business to build a business model around each of these components, to build processes, to build a strategy, to build a mission, and importantly, to build performance metrics, measurable metrics around the E, around the S, and around the G. So we're seeing that this is the practical sort of application in business, is the ESG concept. So we wanted to give you an example of a company that, similar to what Ben and Jerry did in the 90s, this company is more in the 2000s that began their journey as a business with an integrated purpose sort of mindset. So Bombas sells socks, and just like the new generations of companies that get into selling products that have been in existence for decades, they figured out a way to make socks fit better, to make socks last longer, to make socks look better. I'm not sure they figured out a way not to lose one of your socks when you're doing a wash, but they figured out most of the problems with socks. They were originally on Shark Tank. They were a member of that television show Shark Tank, where they were presenting their business model. So they started out as probably many in the audience have started out as a startup company with without much resources, without many resources, and now have grown into a behemoth organization. But the reason we highlight Bombas, and you can see over on the left, they use the word be as their be better sort of tagline. And what they did was, the beginning of their business model was, you can see at the top, make a purchase and make a difference. So it says our mission since day one has been helping the homeless. And that's why for every item you purchase, so in this case, for every pair of socks you purchase, we donate a pair of socks to a homeless shelter on your behalf. So this has been the business model and approach from the first day of sales for Bombas. And so why did they sort of pick this particular sort of purpose, if you will, is they did research. Now they knew they wanted to build a company that sold the best socks in the world, and they did research, and they discovered that socks are the #1 requested item in homeless shelters around the world. And so they said, perfect, we're going to create this model. We will strive to make this model financially successful for our owners and our stakeholders and our employees and et cetera. But at the same time, we're going to try to make a social impact, and they make it with every sale that they make. So you could see the greatest sock never sold, Bombas, a good sock is a good deed. So they really sort of put both feet into this mission, which I think is personally, I think is just a terrific sort of mission and example. I hasten to add that they are incredibly financially successful and have grown substantially in a very short period of time, rooted in this business model. So then now they sell other items beyond socks, for example, t-shirts and things like that, but they have taken the same approach. For every t-shirt that they sell, for example, they donate one to a homeless shelter.
And Steve, to your point, Bombas knew that socks was the #1 need for homelessness. And then they found the #2, and they actually started creating product in #2 and #3. So from a product extension, it's brilliant.
Brilliant. And I'll say that when we look at a sort of a business model like this, it's this intentional sort of building of the business model to ensure, and this is hugely important, I think, Rick, to ensure that profits need to be front and center alongside of environmental responsibility and social responsibility, Rick, because if you're not going to succeed profitably, you're not going to do any good to anybody. In fact, you're going to do harm. You're not going to be able to keep your employees. You're not going to be able to keep your suppliers.
And Steve, Bombas is actually premium priced. I've actually bought them in the stores. You pay a little more, but you feel good about buying it.
honestly, it works, and you know, that's usually attributed to the younger generation, but it works for me as well. So it works for, I think it transcends generations, that concept you described. This is a local, if you're in New York, this is a local example, Greystone Bakery. It's really sort of one of the rock stars of ESG. It's a bakery. It's based in Yonkers. They built their business. It's very successful. If you buy Ben & Jerry's ice cream and you get the chocolate brownie flavor, it's Greystone Bakery brownies that are in the Ben & Jerry's ice cream. They have a business model where they've patented an open hiring process. And what that simply means is they hire anyone regardless of background. And so they've opened up opportunities that for some have not existed before. And they provide training and they provide sort of a career path. It's been a brilliant, fascinating example of how, again, you can integrate creating and sustaining a business profitably, but at the same time, equally make a substantial difference in society and or the environment. They use something that we're not going to go into detail in this presentation today, but we wanted to mention something called a B Corp certification. And B Corp is operated by something called the B Lab. It's been in existence since the early 2000s. And what they do is help companies of all sizes, including small companies, help them assess their business models, assess their businesses, and help them sort of drive and help them integrate ESG into their business models. Again, B Lab is a .org. It's a non-for-profit, so we're not promoting in any way B Lab. It just happens to be a part of this Greystone story. And what Greystone does is not only has become certified by B Corp, but they promote it and brand it as sort of a differentiator in their marketplace. So we've talked a little bit about terminology. We've talked a little bit about the context of ESG and sustainability in business. And now I'm going to ask Rick a couple of questions. So, this is where I think the rubber meets the road, Rick, which is, okay, I understand this is happening in business. I understand big businesses like Pepsi and Starbucks can do this and are doing this, and they're throwing lots of resources to do this. But what can we do in a small business, Rick? And so what are some of the benefits and costs associated with integrating this ESG purpose into a smaller business?
Yeah, I think it's a mindset, more importantly, and you have to think about inputs and outcomes. And there's no question about it, it's good for business. And also, customers are demanding this, employees are demanding this. They want to know, what is your ethical framework? What is your focus on society and in the common good? And what is the value of what it is you do as opposed to what your competitors do? So basically, it's good for business. It's good for business of all size. And we discussed this before, and there's a lot of studies that customers will pay more for your sustainably sourced goods. So, and incidentally, they may cost you more, but your markup is higher. So your profits are greater. And also, you don't own customers. You want your customers to come back to you. You want them to feel good about coming back to you. You want them to buy from you. In publishing, which has been my career, I look at the long-term value of a customer. How many years do I have a customer? What is the long-term value of a subscriber? You've got to be customer focused and know those customers and what they want and satisfy their demands. And today more than ever, ESG and sustainability and profits with purpose are some of the elements that are so critical to retaining the long-term value of your business. And you want to strengthen those customer relationships, regardless of business size. And you want to connect better with your customers. You want them to feel good about what you buy, and you want to have in the marketplace and in social media an element of high reputational value.
And Rick, let's just look at the second bullet for a moment, and let's state the reality of this idea of greater profits. You know, let me take sort of a counter view here and say, well, look, I'm a small business. Okay, I'm willing to sort of accept this notion that perhaps my customers will pay a little bit more for sustainably sourced goods. I think, you know, let's wait and see about that one. But what about the pure cost of me integrating this model? So for example, I don't have, there's an opportunity cost on my time, right? I have to spend a little bit more time now sorting through this ESG business and figuring out how to sort of get closer to being an integrated purpose company. And it's probably going to cost me more to source my raw materials for these sustainable products. So what do we do about that, Rick? Or how do you think about that?
I think it's again, it's a mindset, and it starts with strategy. And the question is, what do you want to be, and when do you? These are the consultants' questions. You know, who are you? What do you want to be? Where do you want to be in 3 years, in 5 years, in 10 years? So the question is, if it costs you a little more, a lot of business startups, as you know, you see this in the IPOs, are losing huge amounts of money. But the idea is, in some future time, with their business models, that will turn around, and these will become among the most profitable businesses. So it may cost you early, and it's understandable that it will cost you early. But in the long run, if you want to create growth and long-term value and sustain that, and ultimately be a major player in your competitive marketplace, I don't think you could ignore this anymore, Steve. I just think you can't ignore it.
You can't ignore it, and I'll say this too. You know, I speak with boards of small businesses, or with leadership, or with owners, and one of the things that we get to is something really important here, which is you don't need to be everything to everyone. And what we mean by that is, look, if you're just getting into this ESG space, or you want to sort of expand a bit, turn the volume up a little bit on ESG in your business model, what we're seeing is that smaller businesses with limited time and resources pick a spot, pick a narrow area. You know, look at what Bombas did from the very beginning as a startup. They just basically said, here's what we're just going to focus on: a social good, and we're going to do one thing really well in that social good. And I think that's really good advice for many companies. Even larger ones started out this way, which is, I'm not going to be everything to everyone, and I'm not going to do everything immediately, but I'm going to pick a spot in my strategy. I'm going to sort of put both feet down into that spot, and I'm going to slowly evolve it where it's making more and more of a greater impact as time goes on in the long term. What's critical to that, however, is that that's communicated to your stakeholders continuously and clearly, which is basically saying, look, we're not doing everything. We're going to pick a spot. We're not there yet. We're getting started. Here's what we're doing, and here's where we think we're going to be in the next year, in the next 3 years, in the next 5 years. I think you're seeing that as well, aren't you, Rick?
Absolutely. It's really, if you think about in terms of new business or emerging business, it's the reason for your existence. What is it that's uniquely different? And it may be, as you said, Steve, picking that one segment that differentiates you from your competitors, that makes you a business that others will follow, that employees will go to, that customers will be loyal to, that will generate in the long run, you know, better returns and longer term growth and profits.
Yeah, and just communicating a plan that may not take a lot of resources in the beginning, but you have a plan, and you're going to slowly expand commitment to it and contributions to it, can go a long way in social media and communications, and getting your stakeholders sort of nodding their head saying, yeah, we like the direction you're planning to go in, so we're happy about that. One last thing on cost, Rick.
Yes, Steve, let me just add one thing. If you go into the supermarket today, regardless of what supermarkets, and you look at products, more now than ever, you'll see the words organic, sustainably sourced, sustainable products. These are things that you didn't see 10, 20, 30 years ago. So the consumers, this is embedded in the consumer's demand and their DNA, and they're looking for you to provide this.
Right. And so one last thing on cost I'd like to mention, if that we don't mention in the slide, but it's funding and capital access or capital formation, if you will. You know, whether it's you know, getting a bank loan or a line of credit, what we're seeing that's now transcending to even smaller businesses is financial institutions are basically linking funding relationships with ESG metrics. And so while it's primarily in the big business space at the moment, what banks are basically doing is saying, look, your rate for the loan I'm going to provide you, or the terms of the loan I'm going to provide you, are going to be based on certain predefined metrics on how you're positively impacting the environment or society. And the way the movement is going, Rick, in that regard is ultimately it's going to end up in the small business space in greater share. Are you seeing that as well?
Absolutely. And it's so important to embed that thinking in your governance as an owner or executive of a small to medium-sized business. It's happening. It's happening. So it's not a question of whether you could ignore it. What you have to do is embrace it in the most positive way.
And so that's one way that it may not increase revenues embedding an ESG into your business model, but it may reduce the cost of capital. So the next slide, we're both Rick and I are going to take, and this is sort of as we conclude our discussion is so what do we do? What do we do? What if we're a small business and we haven't done a lot yet in ESG, or haven't done much in ESG, or we started in ESG, and you know, what do we do to integrate? And if you notice, we think communication is as important as what you're doing behind the scenes to integrate ESG. So Rick, why don't you take this slide and talk a little bit about this?
But you know, Steve, just as a macro sense, I would do a market scan, frankly, of my competitors to see what are they doing, because they're also thinking in this way. So you know, and regarding people, planet, and profits, I mean, we think about the environment, and you're seeing this more and more. In the supermarket, they said, please use your own bags. They're charging you for plastic. They're recycling. They're offering you ways to reduce the water usage, or to recycle water, to reduce energy, and so forth. In fact, what's interesting is I was reading about energy usage in America is actually, because of all the savings, is actually not increased in the last 10 years. With movement to solar, wind, and others. So environment is absolutely critical, and it's something that would actually save you money, depending on your product and service, if you you know, focus on the impact, not only on society, but your own the impact of your own business. I think society, the purpose there is really reputation and reputational capital.
Yeah.
How people feel towards you. I've been told about interviews between new candidates in a profession and the partner of a firm, and the candidate is questioning the partner about work-life balance, about how focused they are on sustainability and ESG. And it's fascinating because the dialogue is, you need me. I'm a new entrance into the marketplace. You need me. I want to work for an ethical company. I want to work for a company that cares about me. So
exactly.
Yeah.
I think this step too, Rick, and you touched on this, is this idea of what we call a self-assessment of the business. And so if a business is just starting out saying, okay, I'm going to start to think about integrating this ESG sort of mindset into my business model and into my culture, where are we today? And I think that's important to say, yeah, what's my impact currently on the environment? What's my impact currently on society? By the way, positive and negative. And I want to emphasize negative for a moment, because that can actually go a long way in terms of transparency in calming stakeholders down by basically saying, look, we're not where we want to be on energy, but so therefore we have a plan. We're gonna reduce electricity consumption over the next 4 years, for example. So it's not necessarily always the Bombas model of saying, I'm going to proactively make a contribution of socks to a homeless shelter. It's also saying, I'm going to take a fresh look at my business today, and I'm going to focus on maybe some of the negative impacts I'm having on the environment and society, and build a plan around at least minimizing those negative impacks. That's equally as important.
Yeah, I just looked at a annual report of a large company talking about sustainability and their impact on waste and so forth. And they said by the year 2022, we had expected to do X, Y, and Z, but unfortunately, we're only 50% of the way there. But their focus was doing this, and at least they're trying.
And they're honest about not achieving it.
And transparent about their honest. Exactly right. Exactly.
And I can't understate that. And I think that's important for small businesses, because again, limited resources, limited time, that a plan, understanding where you are, a plan going forward, and communicating that plan in a way that says, look, we can't do everything immediately, but here's where we are and here's where we're going. I think that's hugely important.
As you say, they pick one thing. Pick one thing that is consequential, that resonates with the customer, and that actually is a product differentiator. And that's a winner. Yeah.
And I think that resonates. This first, so we have 5 steps here. This is very high level, but I think the first step is exactly what you just said. This can't be Rick, this can't be a check the box that I'm just going to do some things so it looks like, or it feels like I'm sort of doing ESG stuff. I think what makes this easier for companies is what you just said, which is what's our passion? You know, Bombas, it was socks to homeless shelters, but I think passion transcends down to also your employees and your suppliers. That if you can sort of brainstorm with those cohorts or those stakeholders and come up with something small initially, if you will, but something everyone could basically go, wow, I feel really good about us doing this. It's going to go a long way in implementation, isn't it, Rick?
Right. Steve, on my magazine, I use soy ink, and the papers are all recyclable, and I feel better about it. And I tell all my subscribers that this is what we're doing.
So I guess I can use the old issues in cooking, I guess, right? So I think the first step is, you know, the self-assessment of your company, and then coming together as to what our passion is about one small or one more narrow area that we can do a deep dive into. That would be a possible first step. I think the second step then is to take that passion, and I'm going to ask Rick to expand on this in a minute, but we're seeing many purpose statements emerging where you'll see the bigger picture of ESG in a company's business model be summarized in a sentence, and you know, you clarify and validate that purpose statement. What are you seeing around purpose statements, Rick?
Yeah, I would say it's no longer that we want to be number one in the market, but we want to be the best in the market, because we do these things in support of our community, society, and our stakeholders. And that's a much better statement, Steve.
Exactly. And I can't understate that if a purpose statement is concisely and simply written, it will go a long way on communications with stakeholders. And this is not a trivial thing to do. It's not an easy thing to do. Big companies, you know, hire branding agencies to help them write their 2-sentence purpose statement. but hugely important. In fact, our next, the next in this series of webinars is going to do a deeper dive on these on purpose statements. So we have a passion, we have a purpose statement, and then it's that the self-assessment we talked about earlier in step 3. What is your current state impact on the E, on the S, and on the G? Good, not so good. In some cases, we just don't know. A company just doesn't know. And just knowing, just uncovering the unknowns, Rick, goes a long way, doesn't it, in transparency?
Absolutely. And transparency with, especially in a hierarchical corporation or business, it is so absolutely critical, because from the lowest to the highest level employee, you want to reduce turnover, you want staff stability, you want them to buy into this, and you also want them to tell others about your business. So this is absolutely critical.
So we talked about, I know we've run out of time, so we've talked about stakeholders, and then the final thing is, to think about what the best modes of communication are. Do we do a formal report? How do we build ESG into our branding, and how much transparency do we have, and do we need to be more transparent going forward? So with that, I want to thank everyone for their attention to this. We hope you benefited and got a little bit of value out of this, and we'd be happy to turn it back over to our hosts at the Small Business Development Center.
Steve and Rick, thanks so much. Very insightful and great presentation. A couple of quick takeaways I had. I think I love the stats with respect to kind of the price differential that's available for individuals who are following these principles. I think the ability to kind of have this part of your mission and being able to kind of communicate that, folks, I think is so important. Something else that kind of jumps out at me that Rick had mentioned, alluded to, which was, the fact that this may cost you in terms of kind of getting kind of sustainable and kind of, the suppliers, being able to kind of get all that into place. I think that's really important to incorporate, and kind of led me to think about 2 things that hopefully SBDC advisors can be kind of helpful with respect to kind of these challenges and opportunities, which I think is as Stephen pointed out, with respect to access to financing, crucial, for business owners to be able to have funding available to be able to implement these strategies. I think looking at whether it's a line of credit to be able to, have on hand, to tackle opportunities that may be in place, being able to work with a business advisor to work through, what your financial circumstances are and think about what your needs might be, I think would be beneficial for sure. And the second thing I think was with respect to kind of marketing and promoting this. If you're doing all these important things to be able to bring attention to the important work that ESG is kind of all about, I think you want to make sure that your stakeholders, as you point out, and your customers really are aware of this, and to be able to work with the business advisor, think through what kinds of messaging you want to get out there, what kinds of platforms might be the best way to reach your customers, I think are things that our advisors are attuned to, and I think are crucially important messages. And I really appreciate you both kind of highlighting that and making sure that people have that as a takeaway. So thank you both. Great session. And Renee, I'll turn it back over to you.
Thank you, much appreciated. Lots of thank yous that rolled in. I didn't want to forget to mention those. Great presentation. And I know you mentioned this with an intro. What can folks look forward to for the next session?
Yeah, so as we said, the next session we're gonna sort of use this as a backdrop and then do a deeper dive on this idea of defining a purpose and how that purpose then manifests down into communications, into the business model, and into the sort of steps going forward.
And I think from a practical perspective, we'll do a couple of case studies to give you actual examples of what some businesses have done.
Example purpose statements too are interesting to look at. I find them entertaining, actually. Really, some of them are really well done. I'd like to thank the Small Business Development Center and thank everyone that participated, and thank you, Rick, for teaming with me.